It's about time I show you some trading examples of how to actually trade with the key levels. Now let's move to the trading screen right away, and you'll see that I have two screens, two time frames. So the majority of the examples will be with the daily level. So this is a daily chart, and this is a strong daily level which has been developed quite a long time ago. And of course our trading time frame, trading chart, which is always smaller, and as I've said before, I recommend using the 5-minute or the 15-minute time frame, or as I use sometimes even the 1-minute time frame for my actual entries. Now in this exact example we have 15-minute time frame and a daily level. Now before we dive into these examples, I want you to note that you can trade any kind of combination if you would like. You don't have to trade just the daily levels and in the 15-minute chart or the daily levels and the 5-minute chart. No, I will be showing you mostly the daily level trades. However, you can trade the hourly levels, the 15-minute key levels, the 4-hour key levels, even sometimes a 5-minute strong limit player key level. That is absolutely okay. But remember that the daily levels are the strongest ones, and that's the reason why I've said before that I do strongly recommend you starting with trading daily levels and using the 5-minute or 15-minute time frame for your actual entries. Alright, let's take a look at this example. Here we have a really strong daily level that you can see one false break, a complex false break, and another complex false break, which almost look like a false break with two candles, but the two candles didn't quite work out. So the false break with three candles, which is a complex false break. Now we see this level, we see that it was confirmed by another false break here. So we can, once we see this candle beginning, which is 1 day, as you can remember, a daily chart, one candle is 1 day, we move to our 15-minute time frame, or we can actually move to the 5-minute time frame or the 1-minute time frame, whichever we use for our actual entries. Now, as I have in this example, the 15-minute time frame, and we can see that this whole piece looks like a ridiculously complex false break. However, remember the lens concept. This whole piece is right here. This one right here. This small false break, a usual looking false break in the daily chart, this is what it looks like in a 15-minute chart, and just imagine what it's gonna look like in a 1-minute chart. Remember the lens concept, and so don't get confused and don't think that the level was broken and everything is great and we should be moving up and maybe trading a false break from beyond here of going up. It's not always the case, and remember that the daily chart, the bigger the time frame, the stronger the time frame, the stronger the key level and the stronger the signal. And if we can see here, this is looking like a formation for a false break. So if you think that in 15 minutes it looks like a true break and it looks like the price has broken through and everything is great, but check the older time frame, check the hourly time frame. What does it look like? Does it look like a potential for a false break in a larger time frame like it does here in the daily chart? So don't get confused. And this is extremely important because once again, in the smaller time frame, it might look like a true break, that price has moved above the level and everything is fantastic. But in the daily chart, like this one right here, this is a really nice, quite small, complex false break. So always pay attention to the older and the larger time frame. Alright, so as you can see here, we have quite a nice false break following this complex false break, and this is pretty much what it looks like in the 15-minute chart. And what do? The price can be anywhere around these candles. It does not matter. And what matters is that we set out our stop order a few points beyond the level for the false break concept, as you can remember that I was teaching you a few lessons back. And of course, in this case, we cannot use a technical stop, so we have to use a fixed one, because the technical would be around 100 points here, so that makes absolutely no sense, even more than 100 points. So here we would have a stop of 20 points, and as the price moves down, it will open automatically a short position. So a stop order for selling. So we will open a short position. Now in our take profit, here I used a 1, 2, 5 take profit, simply because it was a really strong daily level and our ranges and the ATR was very powerful. So I did expect to take at least 100 points from this kind of a move. So that's the reason why, according to my expectation, according to the ATR and what the ATR let me do and what I could expect, I set my take profit at 5 to 1. And in this case, it was a really easy trade. As you can see, just kept going down and down and down. And this was the fantastic, powerful impulse of moving down after the false break. And this, in this position here, people who went into the long position here, believing in a true break, maybe they were looking at a smaller time frame or did not believe in a false break in the daily chart. Who knows? We don't know that, but the fact is that a lot of people were going into falling prices here, so opening a short position, and a lot of people were selling off their long positions. And this is what generated a really powerful move down from here. And as you can see here, we've taken our take profit would have been here. So that is quite a short distance. However, those are 100 points. And even if you're trading $5 per point, that's still $500. So this is quite nice. And as you can see, this is a 15-minute time frame, so it would take around an hour for you to make 100 points on trading the false break of a daily level, as in this precise example. So here is another example of trading a daily level. So here you can see that this is a really, really strong level that was created by a false break. So it's the level is calculated from here. This is the CCL, the candle that created a level, and then it was confirmed by this candle and by two false breaks, extra false breaks right here. So we can trade both this one and this one. These are the two false breaks that we can trade. And of course, this this key level is also created by a trend break. So this is where the powerful, super powerful daily trend had stopped. And you will find these levels a lot, and they are quite easy to identify, and I already did teach you how to do that. Now, in this precise example, we do have two trades. And this is what it looks like in the 15 minutes. So remember, I told you that when the market looks hectic and unpredictable, that with the indicators, you probably should not trade it. But I promise you that by the end of this learning program, you will learn how to trade even a hectic market. And this is how you trade any kind of market. You don't care if it's hectic, if it's slow, if it's confusing. If you have a strong level, you trade it. Only with the indicators, it might be quite difficult to trade a hectic market, but not with the key levels, because with the key levels, you're able to explain quite a lot of market movement. All right, let's take a look at these examples here. So this is a fantastic, super small blimp, a super small break of the level here, and it becomes a false break. But the thing is, with these kinds of entries, you should be very quick. Remember, as the price moves above the level, what do? You set out your stop order for opening a short position if the price moves quickly down through the level again, and you will automatically open a short position. Now, in this case, as you can see, this can happen within seconds. So you need to be very, very quick. And even me, a lot of times myself, I miss quite a lot of trades simply because they are super quick. Those false breaks can be super tiny and they are very, very difficult to catch. So you need to be paying attention to what you're doing when you're trading in order not to miss a bunch of potential false breaks, because even this super tiny false break is still a fantastic opportunity for an entry. And as I've said before, the smaller the tail, the smaller this fuse right here, the more potential for a powerful move there is. And this is just the reality of trading the key levels. So it is quite simple here. We enter as the price moves down. Here is this line right here is the place where I would place my stop order, and I would have a super, super short stop right here, just beyond the fuse, just a few points beyond this tail. Now, the reason is, as I've said before, when you can use the shortest possible stop, and in this case, the technical stop is a lot smaller than the fixed one, and in fact, our stop here is 10 points. So it is really, really nice, which allows you to have a bigger take profit ratio. So in this case, I'm using not the 1-2-3, but I'm using a 1-2-4. So I would like to take 40 points. I'm risking 10 points to have an opportunity to take 40 points. So this is where I would enter, and the market moves quite nicely in our favor. However, it quickly returns, and this is okay. Remember, we have just a really short stop. If it comes back up and pulls the stop, that's okay, that's fine. And you'll see quite a few examples where these kinds of trades don't work out, and it's okay. It's absolutely normal, and these trades don't always work, and there are no concepts or strategies in trading which will be 100% accurate. Absolutely not. And you will see quite a few examples where it did not work out. So here, as you can see, this take profit is here around 40 points. And as it moves down with another powerful move, it takes our take profit, and we are quite happy. The next one, the next is it moves up again, and it goes through the level powerfully again. And remember, if it goes through the level with really large, powerful candles, what does it say? It gives an indication that the move will probably be reversed. So the price probably will not break the level. So, and of course, this is once again the same level, the same line, the same price level at which we would place our stop order to open a short position. And here, as you can see, the price moves down and quite quickly takes our trade once again. But here I was forced to use a fixed stop, which was pretty much the same as the technical one. So the stop here was 20 points. And here I used a 1-2-3 ratio. So I wanted to take 60 points, meaning that my take profit would be around this location. And as you can see, this level, the second time it did not work quite as nicely, and our stop was almost pulled. However, we were quite lucky, and there still was some impulse. So we started with a nice impulse going down, but then something did not let it go further down, and perhaps some limit player or somebody strong was trying to push it for the break. But the seller still won this battle, because this, as you can see here, this is a real trading battle in between the bear and the bull. And this is quite a nasty situation, and this is a lot of times resulting in a stop being pulled. And thankfully we had quite a large stop, simply because as we opened the trade here, the first time it went to our stop level to open our short position, we had nothing to attach our technical stop to, like we did here, for example. Therefore, we were forced to use a larger one, our fixed one, and not a technical one. So in this situation, as it moves down and then back up and then down, and it looks like a saw, it's really broken, hectic, and quite nasty, to be honest. But this is the hardest part in terms of trading. Try and do nothing. You have a really nice structure. You have a really strong daily key level, which already worked once. That's fantastic. And if you enter and see some ridiculous stuff like this, it's okay. If it stops you out, so be it. Don't worry about it, and please don't keep closing your trades for no reason. This is no reason to close your trade. Maybe if you were trading indicators, then an indicator will give you a reason to leave, but not the key level. So don't touch your trades even when you see something nasty as this, because oftentimes then this position could be this place could be a position gathering location for somebody that later actually had a really powerful impulse, and it went right beyond our take profit, and we made 60 points. So this was a bit more difficult to stand psychologically than our first entry. However, it still worked just fine. And a lot of times when I feel too stressed, I might as well just leave my screen, go make myself a cup of coffee or a cup of tea, and don't actually look at it, because this can be quite difficult to stand, because every candle here is 15 minutes. So that means that this whole ordeal, this whole nastiness took a few hours, quite a few hours. And this can be very, very frustrating. So sometimes, even myself until this day, sometimes I just leave the screen alone. So once again, quite a simple, powerful, strong daily level in the daily chart and our 15-minute trading window, trading chart. And we've traded two quite nice false breaks. One was quite a super simple one. Another one was a complex one that ended up with a bunch of hectic moves that could have devastated our psychology and our mind a little bit, but it still would have worked. So these are really nice examples of how to trade the daily key level using a smaller time frame. All right, this lesson is coming to an end. In the next lesson, I'll show you quite a few more examples. And for the time being, please don't forget about the test and enjoy your homework. It's quite an important one. All right, see you in the next lesson.